Greetings, members, one and all of the Salivation Nation. We may be starting to see the flattening of the curve, so to speak, for gold and silver, at least through the spring, according to an article here at Kitco. Let's explore. Yes, that's right. According to this article here, we may not see gold prices breach $1,800 this spring. But before we get into this article, I want to make you aware of a video I posted very recently about my full palladium stack. You will see a link to that video at the very end of this video, the end screen, and you can see that video for the full palladium stack, because palladium has made some moves for sure recently. This year has been really explosive for palladium, and right now it's sitting at above $2,200 in the ask price, but it's still down just a bit. It did get up very, very high. I'll talk about that in that full stack video as well. But as you can see here, as of this video, which is a Sunday, just before the markets open up, precious metals are down. So it has been sort of a dramatic shift of sorts, but the metals are up overall compared to where they were with the beginning of the big smackdown that occurred because of the closing of the markets, when there's this huge sell-off of everything. So this particular piece by Anna Golubova from Kitco News says markets are ignoring the negative backward-looking data and are instead focusing on what's to come. Economies eventually reopening. For gold, this means continued risk-on pressure next week, according to analysts. Sentiment is a bigger driver than macro fundamentals. It's definitely true that the macro outlook is especially favorable to gold right now, but I don't think that's going to be on everyone's radar until we're in the recovery phase, which is very interesting. This is according to Gainesville Coins precious metals expert Everett Millman, who talked to Kitco News. Some optimism in the marketplace has reawakened investors, shaving off more than $80 of gold's 7.5-year high at above $1,780 an ounce hit earlier this week. In the meantime, U.S. equities are doing well, for the Dow last up nearly 500 points on the day. There's an element of profit taking here. We did hit some technical levels that persuaded some people to get out. The other thing was risk appetite. There were those who strictly think that gold is a function of the equity market, and if the equity markets do well, then gold should do badly. We see a bit of a negative correlation between the equities and gold comeback, said TD Securities head of global strategy Bart Malik. We've also continued to have a very robust U.S. dollar. The risk-on sentiment, which is weighing on gold, comes amid reports that Gilead Sciences' drug has demonstrated some effectiveness in treating the coronavirus, which is giving investors hope that the U.S. economy could reopen sooner than expected. The week's trading has had a unique pattern to hit, with algorithms calling most of the shots, highlighted Millman. The latest data from the CME shows that the majority of trades recently in gold futures have been conducted by algorithms. We can expect some sharp swings because of the nature of how algorithmic trading works, he described. We do tend to see that when the prices get higher like this, pressure on gold prices is unlikely to subside next week, even though traders are likely to buy the dip in prices, according to analysts. Of course, when we're talking about buying, really no matter where the spot price goes, the premiums are here to stay until the supply chains can come back into momentum. And I do think that the physical markets are reacting totally differently than these paper markets here. You know, the physical doesn't care about algorithms, and when people want it, you're going to see an increase, another kind of a spot price. The demand premium is what I call it, which is going on, which is what we're paying if we want to buy gold out there. We're getting some consolidation off of those highs. Some of the key things is watching for are whether or not the Federal Reserve has to continue to expand its stimulus. The consensus is that they're not done, and that there will be more bailout packages coming soon. Well, there's also another package in Congress, for the small business bailouts as well too. Many analysts have been describing the pullback in gold prices as a healthy one. It feels like this pullback that we're having right now is a needed correction, said Blue Line Futures chief market strategist Philip Streibel. The critical level to hold is around $1,700. The $17.04 an ounce, or $1,704 an ounce level, marked a key resistance point for a while. So you're going to want to keep an eye on the $1,700 level next week, Streibel noted. The $1,800 would be the next likely target if $1,750 is breached. Malik sees support at around $1,670 and resistance not much above $1,724. It's going to be a fairly narrow range here, he said. We have had an $1,800 price forecast, but that's not right away. For this quarter, we're looking at the $1,625 average. We don't get to $1,800 in an average until the second quarter of 2021. Wow. So he's long out there. Analysts expect significant new gold price gains once borders reopen and the global recovery begins. So that's interesting. A reference point has been how gold behaved in 2008. The last time we had a crisis of this magnitude, during the crisis, gold was very volatile, and it had its biggest gains once the recovery had started. Until the economies around the world reopen, we probably won't see gold test anything above $1,800. So that's interesting analysis based off the past, although I think that's a risky kind of a prediction to make, because this is different. The economy essentially has been paused by force, and on the other hand, fear may prevent it from growing as quickly as some have predicted. This V curve, I think most analysts and most economists are moving away from that kind of prediction. Some stability is crucial before gold can move much higher, added Malik, who is projecting $2,000 an ounce level for gold by the end of next year. Right now, there's an awful lot of disinflationary prices on the economy. It is very likely the North American economy is going to drop by 25% on the quarter annualized. We're going to have massive unemployment. Yep, 16 plus million jobs. 22, I think, million jobs now lost. Once the U.S. sees a bit of economic stability and the real rates continue to be low, then currency evaluation and inflation comes into play, noted Malik. If that's become a problem, that will drive gold to around the highs that we've seen in the aftermath of the financial crisis. In today's dollars, it would be around $2,100. Wow. All the frequency data, such as U.S. jobless claims on Thursday, will remain the most significant market drivers out of all the macro fundamentals. That's true. These job numbers, they can make a break these things. And I tell you what, it's really scary out there what's going on. A lot of businesses closed down, and how many of them will reopen? Every passing day, you have to wonder. Tuesday's U.S. existing home sales for March are also important to watch, as they might reveal something about the consumer behavior going forward. And in fact, there's some people that are saying they're wanting to get their permits in and construction started because they know that this is a window of opportunity before things get really bad. And my guess is the housing market will be next. We want to assess what happens once we remove all the restrictions. Will people get a little freaked out and not want to look at houses? March's existing home sales are a good indicator because we really haven't had any formal lockdowns in March, but we knew what was going on, he said. Even if a lot of those restrictions are removed, it's still debatable whether people without the vaccine would be willing to go out. Of course, there is no vaccine, and there probably won't ever be a vaccine. I think that's a misnomer. I think what they mean is a booster shot, the type of deal, like the regular flu shot. Other data to keep an eye on, including Thursday's manufacturing PMI for April, and new home sales for March, as well as U.S. durable goods orders for March. And I think once the April numbers come in, we're going to see a world of hurt. And that'll be, probably come out those in mid to late May, possibly. And then we might see gold and silver climb up out of the fear of that. It's like, whoa, what's going on? And by then, maybe we'll see more things open, but fear that it's too little too late. See what happens here. Very interesting to see how sentiment is, and it's kind of pause. Is this a good buying opportunity? Does this mean that it's just a matter of time before gold starts to climb up again? And by the end of this year, like Hammond forecasted, saying that $2,000 gold is in the books for the end of this year, not next year. We'll see. Or does this mean that gold is overvalued and that we might see a pullback? And what about silver? Every time gold pulls back, it seems like silver pulls back even more. It'll be very interesting to see. Nonetheless, palladium reacts as well with platinum, and palladium is both those metals are down now. And again, as I reminded you at the beginning of this video, stay tuned just a little bit. You'll see the link pop up here for the full palladium stack video if you're interested to check that out. And I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.